Greetings, friends. This is Oleh Ivchenko, head of the company Pareto. You are watching a new episode of Pareto Point, the program where we discuss interesting events from the world of valuation, business, and finance. In today's episode, the astonishing valuation figures of NVIDIA, warnings from the International Monetary Fund, and the first financial bubble that happened 400 years ago. Let's get started. NVIDIA Corporation has made history by becoming the first company in the world whose market capitalization reached $5 trillion. This is a new record that has cemented NVIDIA's leadership in the field of artificial intelligence. The company's stock growth began after the emergence of ChatGPT. Since then, their value has increased 12-fold. At the same time, analysts warn that current valuations may be excessive as the company's price is outpacing its actual financial performance. Today, NVIDIA is not just a chip manufacturer, but the foundation of the global artificial intelligence infrastructure. It is also a vivid example of how the market valuation of tech giants depends not only on profits, but also on expectations, faith in the future, and political decisions. In its October report on global financial stability, the International Monetary Fund warned global stock markets are showing signs of overheating. According to IMF calculations, current prices for risky assets significantly exceed their fundamental indicators. The greatest risks are observed in the United States. For example, the S&P 500 index is currently valued at a record high, more expensive than in the vast majority of periods over the past 35 years. A significant portion of the market is made up of shares of technology giants, particularly companies connected to artificial intelligence. IMF experts warn such concentration and inflated expectations have repeatedly preceded major market crashes. About 400 years ago, between November 1636 and May 1637, an event occurred in the Netherlands that became a symbol of irrational investing, the so-called Tulip Mania. Within a few months, the prices of tulip bulbs increased 20-fold. A single rare flower was worth as much as a house on the Amsterdam waterfront. But by the spring of 1637, the market had almost completely collapsed. This historical episode became the first documented example of a financial bubble. It demonstrated how the desire for quick profit and collective euphoria can detach an asset's price from its real value and what consequences this can lead to. By the way, the market still often repeats this mistake today. Times change, events and scales shift, but the essence remains the same. Proper evaluation helps us see things as they truly are. At Pareto, we believe that a clear perspective and quality assessment are the foundation on which business stability stands. Thank you for being with us. Subscribe to our news, share this video with your colleagues and friends, and leave your thoughts in the comments. Meanwhile, we are already preparing a new selection of news from the world of valuation, business, and finance for you. See you in the next episode of Pareto Point.